All right. Hi, everybody. This is Z Awana coming to you from NoVa Notes Meetup and Awana Holdings. And today we have our guest Shante Duffy from Madison Management Services coming to talk to us about servicing your notes. But before we get into that, you know the routine. Let's talk about a disclaimer. So all of the information that you're going to hear in this presentation is for informational purposes only. Neither of us are lawyers or selling any kind of financial products or anything like that. But if you should need those services, please seek out those professionals. Let me go into a little bit about myself. Again, my name is Aninzi Awana. People affectionately call me Z because most people can't say my name. So I'm a retired Navy veteran, and I am currently an active federal contracting officer by day. And I have a master's in education and a master's in public administration. And I've been real estate investing informally for a little over 30 years, just doing rentals and things like that, going from duty station to duty station. And then I started Awana Holdings in 2018, and I started that with the goal of going into fix and flips, but then I stumbled upon mortgage note investing, and that's where we are today. So some ways that you can get in touch with me. I'm all over the place. You can go to my website, go to the Meetup, Instagram, LinkedIn, all of my information there. And so let me talk a little bit about what a mortgage note actually is. So just generally, I like to go into this briefly for those who, don't know what a mortgage note is or are interested in what a mortgage note is. So let's say that you're a flipper and you buy a property, or even just a regular mortgage borrower. You've taken out a loan on that home, and that mortgage loan is secured by the actual property. Mortgage note investors buy those actual loans at a discount most times, either whether it's performing or non-performing. We buy those notes at a discount, and we own the lien on that property. So we become what we call the bank. We are being the bank. So you would end up paying your mortgage note to us as a bank the same way you would pay your mortgage to a traditional bank. So just like to make that distinction known in the beginning. So it's real estate, but it's not your traditional real estate as if you were a flipper. So a little bit about our guest today, Ms. Shante Duffy. She's coming to us from Madison Management Services, one of the more well-known servicers in the note industry. And here's Shante's contact information. Feel free to reach out to her with any questions and things like that you may have. And I'm going to go ahead and let's look and see. Everybody's here. So Shante, welcome aboard. Thank you so much for doing this. And
thank you for having me. I'm excited.
Absolutely. So let's tell everybody a little bit about yourself, and then we're going to talk a little bit about what you would do as a servicer. You bought your first note. So now what do you do?
Absolutely. So as you stated, my name is Shante Duffy. I am with Madison Management Services. We are a loan servicing company where we service performing loans, non-performing loans, first liens, junior liens, land contracts, contract for deeds, agreement for deeds, all those fun things. We also assist in foreclosure coordination and bankruptcy coordination as well for those loans that you guys are purchasing that may fall under those categories.
Mm-hmm. Okay.
I've been with Madison for about 8 years, and my favorite part about Madison is that it's actually started by an investor just like you guys. And I think that, that's what makes us a little bit different than some other servicers. The president, founder, CEO, Kevin Cordell, he, started getting into notes kind of the same way you guys are, just by, following some groups and mentors and networking and things like that. And here we are, definitely over a decade later.
Wow.
And he's got a successful servicing company.
That's a long time. Do you buy notes yourself, or are you just in the background?
My feet wet. It's a question I get asked by everybody. Definitely just getting my feet wet. I really don't have valid reason as to why.
Right.
I deal with them every day, deal with lenders every day. I don't know. It's just, it's just something that I'm like, no, I love what I do on the servicing end.
Right.
definitely want to be like you guys as well. I definitely, see the pitfalls that happen with buying notes and just being an investor, but then I also see the success sides. So I get both sides of, the coin, and it's an investment at the end of the day. So there is risk involved.
Right.
But I definitely think it's an amazing thing to be investing in.
Yeah, I think you would be a monster note investor.
Yeah, that was my goal for this year for myself. I know I've been pushing it off, but I've actually kind of been slowly getting my feet wet and, just kind of diving in.
Okay. So tell me a little bit about, so I new note investor. I got my little first note. Now what am I supposed to do?
You definitely need a servicer. The servicer is responsible for a few different things for any note investor. We are the ones that are going to keep your loan within compliance through state regulation as well as federal regulation. We will track all incoming payments from your borrower. We will make sure that their monthly payments are being applied correctly to their loan. Therefore, their loan balance should be going down if they're paying. We will send out statements, late notices, everything that is required to service a loan. Your borrowers do need to know, what they owe, how much their balance is. They are required to know that. So as a new investor, you should always have an idea. And I tell this to everybody, even before you close on your deal, set yourself up with a servicer. If you know what states that you're bidding on notes in, so let's say you're buying notes in Florida, Georgia, Ohio, things like that, make sure you find yourself a servicer that is licensed to service in those states. It's very, very important that you board your loans and set your loans up with a licensed servicer. That's to make sure that they follow all state regulations and rules, and they have the right and the ability to service your notes and stay within compliance. I tell everybody to do that up front. If you're bidding on some tapes, it's just simple paperwork for most servicers, signing servicing agreements and getting yourself as the lender set up. So what that means is if you're buying your notes through an LLC that you've created, some sort of company or an IRA, get that set up with your servicer, no matter what. So just kind of reach out, get some feelers, definitely shop around, interview different servicers. I am a huge fan of that. Get a feel for what everybody does. And in the grand scheme of things, we all do the same thing. We're supposed to. But there's certain things, where some servicing companies require a minimum amount of loans to have. So that servicer might not work for you, or a servicer that if you're buying loans in the state of Maine, let's say, or New York. Madison doesn't service in New York or Maine, so you want to find someone that can. Definitely get your feelers out there, set out some time to call them, have, set up some phone calls, emails, things like that. They'll walk you through what it is that you need. Typical questions that you'll be asked is if you're purchasing or about to board, which is also known as setup, loans that are performing or non-performing, which means are the borrowers paying or not paying. We definitely will ask you, they should be asking you, what states you're looking into, just because I hate having someone go through the entire setup process, which isn't a lot, but when you're brand new and you've never done it, it can
you don't know what you don't know.
So I always try to get that information up front so that I know kind of how to gear them, where to track them to. If it's a state that Madison specifically can't service, I'll send you somewhere else. I'll, give you a referral to somebody else. But I like to find out a little bit more of information to be able to walk you through the program options that are available to you as a lender, or why one loan would be boarded under a certain servicing program versus another. At that point, you kind of review our fee schedules and fee structure, so you have an idea. There is a cost to servicing. Nothing is done for free. This is part of your investment process. It's not just like, hey, when the borrower pays off, you guys get paid. No, that is not how. I've had a lot of lenders recently ask me that.
Works.
That's not really how that works. We are keeping your loan in compliance on a monthly basis because we are required to. So I definitely suggest you contact your whatever servicer you choose and just, hey, I'm looking to board a loan. What do I need to do? They'll walk you through what it takes. You want to set yourself up. You want that information to your servicer before you actually close on your note. Transfers don't naturally happen overnight between when you're buying a loan, between one servicer to the other. That stuff does take time. There are time frames that we have to follow as servicers. So it's always helpful to know. You'd be like, hey, you'd be like, hey, Shante, I have a loan that I want to board with Madison. It's currently being serviced somewhere else. I want to make sure that I have all the things that I need from you being the lender set up here, so that when that other servicer says, hey, can you approve this loan transfer, I can actually say yes, and that there's no delay in the servicing transfer side.
So I have a question. So before you mentioned about Madison not being, not servicing New York, for instance. So what about, you know, we have a few states now that are starting to require note investors to be licensed to even hold the notes or collect on the notes. And I'm sure that the servicing company has to be licensed in those states as well. What do you do, or what's the remedy for, let's say the investor may not be licensed in that state? Is that something that the note investor's attorney handles and communicates with the servicing company, or will you guys just not service it?
So the rule of thumb, any servicer's license, so Madison Management has their own licenses per state to be able to service in that state. There are states that do have other licenses that require the lenders, also the debt buyers, to be registered or licensed. I highly suggest every lender, when you're going to purchase a note, when you're doing your due diligence, when you're bidding on tapes early on, double check in those states. Go onto the NMLS, it's a website, you kind of click state by state and you review if you as a lender need to be licensed, because my license at Madison does not cover you guys as the lender. It covers Madison and its employees to service the loan, but it does not cover you guys as a lender. So I know out of the gate, the state of Georgia requires lenders to be licensed as a lender.
Right.
Don't go buy in Georgia if you're not licensed. There are ramifications. I'm not 100% sure as to what they are,
Right.
But I'd rather you guys be safe than sorry. You know, you don't want to walk down like 2 years into this investment and have a bigger problem on your hands. So just double check. They have every state website. They have a point of contact too. So you can even shoot an email and say, hey, I'm a note investor. I'm thinking about investing and purchasing a note and mortgage out of the state of Georgia. Do I need to be required to have a license? And they'll answer you. They will tell you yes or no. They'll tell you exactly what license you may need. You can set up a call, and then they give you the stipulations. It's up to you to go apply.
Right.
Now, it is very helpful for us to know that you are licensed, but it's not 100% mandatory. I do love investors like, hey, I got licensed in Georgia, so you know, if you ever hear of anything, whatever the case may be, just kind of that transparency, it helps us. But that's one big thing that a lot of lenders don't realize.
Right, because it's not going to affect you. It's going
to affect you guys as the lender. We have a different side of it. So I always stress, go check the NMLS. You could check it any day or night. It's a website. I kind of live out of there, just kind of curious, because there's investors who do call and they're like, hey, Shante, do you know? I don't know off the top of my head what states have to require you being a debt buyer, even if you just have to be registered, but you just to be safe. I know that there has been times in my experiences dealing with investors who couldn't continue through like foreclosure because they didn't have registration, like their attorneys wouldn't let them continue forward. Your personal attorney may be able to help you with that, but it is an application that you have to file with that state. So if your attorney is, like I reside in New Jersey, I don't know if I'd necessarily contact a New Jersey attorney to help me in the state of Georgia. And that's just across the board with anything. So definitely call. They are very helpful. I've called, I've sent emails. I know other people in Madison have done the same thing. It doesn't hurt just to be safe. I know a lot of lenders who are like, hey, I know you need a license there, so I'm not going to buy there. And they do that for themselves. And then they also do it depending on their servicer. If they like a servicer who is not 50 state licensed, they're like, okay, well, I'm not going to buy in this state. Or they buy and they kind of table it, hoping that their servicer of choice actually is able to get licensed there for whatever reason.
Wow. So we talked about setup and the boarding of the loan, quote unquote. What kind of things should the investor look to provide when they're boarding the loan? Of course, all of the information on the loan, but are there fees? What kind of fees are associated with doing something? So
when filling out your lender or entity setup, there's no cost to fill out that paperwork, and that's just to get you to be a client of that servicer. At least with Madison, there's no cost. I cannot say that for everybody else. So at the very least, that's what we need. The next thing is, for each loan that you board, we have to have what we call a loan intake form. That's where a form that allows us, I handle the loan boarding and the investor setup here, so it actually allows me, it gives me some knowledge and gives me a heads up, like, hey, Shante, I bought this note. I need to board it under this entity. This is the borrower's name. It's just a form. You can fill it out electronically. It is on our website. It gives us the property address, the borrower's name, and then you're going to let me know a little bit of information on this loan. So you're going to tell me if it needs to be under our performing loan servicing program, or if it needs to be under one of our non-performing servicing programs. You'll let me know what type of loan it is. Is it a conventional note and mortgage? Is it a adjustable rate mortgage? Is it a home equity line of credit, commercial line of credit kind of thing, land contract? You'll let me know. The lien position is what I also need to know. It'll also ask if you needed escrow services. That is a service we offer where it's usually for senior liens, where we will collect additional funds from the borrower to pay out their taxes and insurance, and or homeowners insurance. Senior liens usually have that placed. If the loan's in bankruptcy, you'll let us know about that. If the loan's in foreclosure, you'll let us know by the time it comes to me. If you don't know, we do kind of find that out, but that should be part of your due diligence, knowing what you're dealing with and what you're buying. So we definitely need that intake form, and along with that intake form, we need digital copies of the collateral file. So that would include the note, the mortgage or deed of trust, the full chain of assignments and allonges. If you're buying a land contract, it's a little bit different. It's the contract itself and the note, as well as the quitclaim deeds, assignments, and allonges. We want payment history, if you have that, which you kind of should, depending on what you're buying, part of your due diligence again. We want basically as much information as you have in that loan. We are required to actually have that in order to service loan. We have to verify the data that's coming over. So we'll ask you for that up front. At that point, you should have been telling your seller or the current servicer, hey, I want this loan transferred to Madison. You'll provide them my contact information and they'll start the transfer process on their end. When I get a goodbye letter from another servicer, the letter states that, hey, this loan is being transferred to Madison effective this date. It does have Madison's information in it. I have to approve that letter before that other servicer sends it out. So I get that. I can only approve that when I know that the loan intake form and the collateral files have been submitted. I actually won't approve it. I can't, have stuff lingering. So I'll approve that. That servicer will mail that out and they'll actually provide me with preliminary loan data, which is all of the borrower information, all of the loan information. That includes their name, mailing address, socials, date of birth, email addresses, phone numbers, as well as the original loan amount, UPB, interest rate, next due date, last paid date, first ever date, maturity date, things like that. If there's any late fees or additional charges, advances on the loan, that will come from that servicer. We will actually input that into our system. Before it actually hits our system, when we review all of that, you will be invoiced for the boarding fee. So the boarding fee for Madison, it is located on our website. That's just the only fee there is. There's no secret hidden fees or fee schedules. It's just everything is on there. There's a one-time boarding fee currently of $40 per loan. Of course, if you board in bulk, if you buy 10 or more loans, that number changes. And if you end up buying like 100 loans, that's a totally different story. That's taken separately. There is a one-time setup fee. That's the base. If your loan requires escrow services, that's an additional amount of money. That's additional $15 at the setup. If your loan is an adjustable rate or a HELOC, they require a little bit more tending to. Because things are changing specifically in that loan. It's not just processing that payment. We have to update interest rates a little bit more often, send out required letters that wouldn't be the same on a fixed rate. So that has additional fees. You'll be invoiced for that. Most lenders are actually set up on ACH. You have to pay that boarding fee in order for that loan to be actually input into our system. I will not board that without getting the green light from my accounting team. Hey, Shante, this lender paid their boarding fee, keep it moving. Keep processing it and you're good. We do have a window of time though. So it can't be one of those like, hey, Shante, I'm gonna board a loan and you disappear for 3 months, because it pushes me out of compliance if I can't follow the transfer date. There's RESPA guidelines that I have to follow. And there's a time frame as to when I have to actually notify we have to send a hello letter out that corresponds to the goodbye letter. So there is a window of time for you guys to pay that. Most of our lenders are on ACH, so you'll get the invoice and my accounting team will say, hey, this lender's on ACH, don't worry about it. And I'm able to board that loan. Once I do, you guys actually get an email from me. Once I get that loan in the system and I generate the hello letter and it's printed and being mailed out, you'll get an email from me letting you know, hey, your loan's been boarded. The hello letter went out on this day. Your loan's been assigned to this asset manager, because that is something that we do. We have a team of customer service reps, asset managers. They handle loss mitigation, borrower outreach, and things like that. I'll assign the loan a loan number as well. You'll have their point of contact information, and they actually become your point of contact regarding that loan. I don't talk to your borrowers.
Right. Speaking of loss mitigation, we talked offline previously about the borrower's insurance, their homeowners insurance. Most, if not all, of the homeowners are required to carry homeowners insurance on their home. And I, as a lender, would do what's called forced place insurance on the loan. And talk to us a little bit about how forced place insurance works. Does Madison have to be, or the servicing company, whomever the servicing company is, do they have to be listed as a loss payee on the insurance, on the forced place insurance?
So on the forced place insurance, it varies. With Madison, we have a forced place insurance policy. It's an umbrella policy. So for lenders who know their borrower doesn't have insurance or don't actually have proof of it yet, just to protect their interest in that property, God forbid that house goes up in flames or something, you can actually ask us to place forced place insurance on your loan. It's under our umbrella policy. You guys are listed on that as well. We just need some information, whether it's based off of the property being vacant or occupied. There's a form for it. It's a forced place insurance request form that we have available as well online. You guys just have to complete that and submit that. That is placed through us. Now, we have plenty of lenders who have their own FPI policies, which is totally separate, has nothing necessarily to do with Madison as a whole. That is fine as well. There is a huge difference when it comes down to forced place insurance. There is a legal requirement that you as lenders or the borrowers have to be notified that there has been forced place insurance purchased for their property. You cannot charge that borrower for that insurance without following the regulation to notify them that you have purchased it before you charge it back to them. And realistically, forced place insurance doesn't protect the homeowner. It protects you guys as the investor. So if something was to happen in that house, that borrower doesn't get to necessarily file a claim and say, oh my gosh, I lost all my stuff, because they should have had their own. Right. The biggest push I always kind of tell investors is, let's try to get these borrowers on their own insurance policy, because it does protect them. And that's also what our team tells the borrowers as well. You're going to be paying for insurance that doesn't even protect you. So you're paying this money every month, or on an annual basis that doesn't protect you. So it's always kind of that double-edged sword, but we do offer it as an option. If you find out down the road that, the borrower's like, hey, why are you charging me for this? I have my own policy. As long as they submit a copy of their declaration page and their policy information, we'll actually terminate that. So let's say you bought the loan, we had no proof for the next 6 months, you paid for the insurance for the year, we'll terminate it from the effective date of their policy. So you'll actually get a refund. If the borrower has paid anything into it, they'll be refunded as well. But it is something that if you go through our policy, you are billed on an annual basis. So if it's going to cost you $800 for the year, you're going to be billed for $800 up front for that year. So I know a lot of lenders don't necessarily want to be billed up front. They also go and obtain their own policies through a few different companies. I think the most popular that I've been seeing lately is like OSC, which I'm totally not familiar with at all. But a lot of lenders have that and they're billed monthly. So it's completely up to your preference. It is an option that is available to you in Madison. If you go through our policy, we can generate those letters for you as well. We will, and make sure that the required letters are sent out and those charges are added.
And then who would be responsible? Well, of course, I know as a lender, I would be responsible to keep track of whether or not the homeowner had insurance or not. But would Madison or the service company I guess track that or keep track of whether or not the homeowner?
Yeah, so we send out an escrow impounds letter for senior liens that have escrow services on them. And that letter is to the borrower where it says, hey, you know, provide us with your most recent tax bill, provide us with your insurance information. If they send that back, if they send that in, if they send us a copy of their insurance, then, you know, if we're escrowing it, we're going to track it. We'll know, okay, your insurance is due every year, every March. We'll make sure that we collect enough funds for that. There are borrowers who do have their own policy and they pay it separate from their mortgage. We do want to know that every year that you pay it, you know, that we know it's active. The lenders, you know, lenders do ask, we do reach out to the borrower. A lot of borrowers are actually okay with that, and they'll actually submit that information saying, hey, I just paid my insurance again for the next year. Here's proof to know that it's active. And it is something that you're definitely going to want to double check with your asset manager. If they do have a policy, if it is active, if we are not aware of it, you know, it doesn't hurt us to ask when we're talking to the borrower, shoot the borrower an email, give them a call just to confirm, because you guys wouldn't naturally know. Let's say they stopped paying their insurance. Let's say they stopped it and it lapsed or it was canceled. If we're not provided with that notice, it's very rare that we are. The only time as a servicer we are is if we're listed as a lost payee on there to know, like, hey, this is what's going on. At that point, then, you know, State Farm, Allstate, whoever these people are using, will send us a notice of cancellation. And of course, we talk to the lender, you know, before it actually cancels. Do you want to advance this? You know, people go through hardships where there's a reason they can't pay, and I totally understand that, but you don't necessarily want that insurance to lapse either.
Right.
It ends up being a little bit more difficult for the borrowers to obtain their own policy after that, as well. But we definitely will exhaust all options with you guys being the lender, giving you the options that you have. Sometimes,
so if I bought some forced place insurance as the lender, and I bought it, let's say, outside of Madison, would I then put you all on the policy as a lost payee, or
you can,
I guess
most
the ability
lenders
for
don't.
you all to be able to arrange it? Because so for instance, the forced place insurance policy that I had with my current servicer, the borrower had a claim that they had an incident, a small kitchen fire. It didn't burn the house down, thank God, but the borrower called the servicing company saying, you know, hey, we're in a hotel and we need to submit a claim, and we need you to you know,
Help out.
get an adjuster out here or whatever. And so the servicing company calls me as the lender and said, well, you need to call the borrower and let them know. And I'm like, well, hey, I thought that's what you're supposed to be doing.
You shouldn't necessarily have to call the borrower, but since it is your policy, you have to call the insurance company. It's this, and the same thing with Madison. If you went under our umbrella policy, we could definitely file that claim for you, because it's under our policy. So we can file that claim. We would probably hear about it first anyway, and just kind of let you know what's going on. But just know that if that claim comes to fruition and there's a payout, that doesn't necessarily go to the borrower, that goes to you,
right,
being the lender. But if you
that's what I ended up having to call the borrower to explain that the insurance, because he's like, well, I thought I paid for the insurance. So the servicing company obviously charged him for the forced place insurance that I put on the property.
But it's your policy, so you would have to call the insurance
company.
company.
I had to call him and explain that you don't have insurance. Why don't you have your own homeowners insurance? And he's like, I thought it was. You know, like,
it should have been a rule of thumb. Like, anytime a borrower calls, no matter who the servicer is, the servicer, if they know that there's forced place insurance on the property, they should be able to explain that to the borrower.
Right.
Saying, hey, like, you don't have insurance. Like, that call, it should have kind of went a little bit differently.
Right.
Just in the sense that you don't have your own homeowners insurance policy. The only option we have is, hey, being the servicer is the middleman between you guys, being the lenders and the borrowers. I hate having lenders talk to borrowers. That's just my own personal feeling.
Yeah, I was kind of taken aback a little bit myself.
Yeah.
But, you know, I called them, I'm like, okay.
Yeah, I always, you know, as I always say, and as we were talking earlier, you know, servicers aren't the favorited people in this space, but you do need us, and you guys should be relying on us. And as servicers, we should be able to handle a lot of these situations for you. Yes, it's going to be a lot of back and forth communication, but you shouldn't have to call the borrower. You should kind of just be like, hey, you know, Shante, I filed this claim. I understand, like, I call you, this happened to the borrower. Try to get as much information from the borrower about the incident. We'll definitely ask for pictures and things like that, and kind of pass that over to you since it is your policy. I don't necessarily have an affiliation with your policy at all.
Right.
So
Yeah. No, it makes sense. Makes sense. So, so Madison doesn't have a minimum number of notes. So I mean, obviously you have to have at least one, but
You have to have one.
have like pools of notes in order.
No, I know it's something that, you know, a lot of servicers didn't always have and they change, and I completely can understand why. For me, it's very like, hey, you know, I want you guys to understand what you're doing. I don't expect people to come out of the gate, brand new investors, and have 100 notes. That's not realistic. The cool thing is I kind of like handholding and getting you guys to get to a point where it's like, okay, you're confident in your investments and that you understand what's happening, you understand how things work. It becomes a little bit more difficult when lenders, you know, they don't know and they don't have people to talk to. Like, I like that you guys can set up a time with me to talk to me or talk to your asset manager and ask questions. I'd rather you ask and gain that knowledge so that you can continue to grow. My whole thing is I want everyone to grow and then grow with me, you know? So I don't agree necessarily with having a limit. I like the green investors. I like seeing them, and then 3 years down the road, watching how big their portfolios have grown. Just meaning that
notes, right?
Yep, I like that. So we don't have a minimum. We don't want to exclude anybody. We just kind of hope that you guys all get to grow and that you're not completely turned off to notes as a whole. Again, not in every investment is going to be a win, but don't take those losses too hard. You know, they're learning experiences. You can't win them all.
Right, right. So I have gotten just a statement recently here that had what was labeled as unapplied funds. What would be some instances that funds would be unapplied? I mean, you get your monthly payment from the borrower, and the servicing fees are deducted and all of that, and then they have a little column there that says unapplied funds. What?
But it was, did you get the actual payment?
I got the payment.
Did you get the unapplied funds payment though?
No.
Yeah, no. So what unapplied funds are, and they're also known.
I'm sure there can be many reasons for it, but
yeah. So you shouldn't have gotten it as long if the loan is still active. It's just kind of telling you the running balance. It's kind of like a reserve balance. That's what we call it at Madison. So there's many different reasons that a borrower can have funds in their reserve bucket. One instance is that they don't, let's say their monthly payment is $500, but they only send in $350. I can't apply that to the loan and have the next due date. It's not a full payment. So that's got to sit in like a holding bucket, that reserve funds, those unapplied funds.
So it's a full.
Yep. So it's got to be a full payment to be applied. When there's that's really like the only time I actually think payments are actually dumped in unapplied. And it's just because it's got to sit there. It's not enough. Let's say the borrower didn't make 2 full monthly payments. They made 1. That difference there, we don't have anywhere to put it. If they don't want it, if they have no charges on their account and they ask for a principal pay down, you know, hey, apply the difference to principal. If it's an overage of payment, that's fine. But if they have charges on their account, you should not be paying down their principal. So it's just that balance definitely can fluctuate. It's still technically the borrower's money at that point. If you were to foreclose, if you decided to foreclose on your loan and you got that property back, you know, the loan's removed, those funds go back to you. They end up coming to you at that point. If it's removed at that point, those funds also transfer servicer to servicer. So if you're doing your due diligence and you see that this one borrower has $1,000 in unapplied funds and you're not sure why, no matter what, that's going to come to the next servicer. It doesn't go back to the borrower. It doesn't leave that loan. It stays with the loan until some exit strategies, you know, achieved.
Cool. All right. So I have a couple of people that have some questions. So Aldo, if you're, yeah, you're on. So go ahead and unmute yourself and ask the question.
Hello, Z and Shante. Hope
Hi.
you guys get. Hi, how are you? Can you? I guess you can't hear me, right?
Yeah, we can hear you.
All right, perfect. All right. So yeah, so I have a couple of questions. So I guess the first one is I'm new to note investing. So first question, you mentioned for performing notes versus non-performing note, the monthly fee servicing costs are different, right? Obviously, a non-performing note should be more expensive per month as a performing note, right? Because you may have do more work and more stuff.
Yep.
Okay, that makes sense. Okay, perfect. Thank you. Second question is now, does Madison charge just a single monthly fee for one note as opposed to a pool or a bulk note pricing?
It's a flat fee per loan.
Okay.
Unless you have bulk, and when I mean bulk, you have like over 100 loans kind of thing in one entity. That's when there's a difference, but it's a flat fee per loan. It's based up per month per loan basis.
Okay, because I know some servicing company, they charge like a minimum so much per month, and you have one, you have 50. It's the same price.
No,
So,
we do flat fee per loan,
perfect.
whether it's
That's
performing
excellent.
or non-performing. You can have a mix of both.
Perfect. Now, the other question is, do you at Madison, do you offer a service for collateral custodial servicing for the
We
notes?
do.
So,
It is not housed at Madison. They're housed off-site with a third-party vendor that we use. It is an annual fee of $40 per file. You are not required to use Madison. There are companies out there that you guys can use, and that's for any servicer that you guys can use individually. But it is an option if you'd like to use that.
okay, so you do offer that service. Okay, perfect. And the last question, Shante,
Ask
is
as many questions as you need.
Yeah, keep going.
all right.
We
Well,
got
thank
time.
you. It's the same price, right? All right. So,
Yes. Free,
so
$3.99.
excellent. Okay, so the last question was, now usually as a known investor, the lender pays for for Madison's the servicing monthly fee, right? Is there a way to have the borrower integrate into the P&I monthly payment, that fee? Is there a way? Unless you do a seller finance note, you can probably work that out.
It's a very common question that's asked. Seller finance note, I hear it the most because it's not created yet. So they're calling and, hey, I'm about to, create this note, and I'm doing my due diligence with the borrower, getting their information. If it is not spelled out in that note, or there's not an addendum to where the borrower and yourself as a lender sign off on, yes, the borrower is responsible for X amount of dollars for the monthly servicing fee, we can't enforce that. You technically are my client of a servicing company. You hired me. So to push that fee back to the borrower, it'd have to be something that the borrower agrees to. An agreement in the sense that there needs to be like an addendum added to the promissory note, which outlines what they're responsible for paying naturally. You'd have to do that. Doing that, again, you have to get the borrower to agree to that. The gray area with that is if you're doing, and I tell this to the seller finance lenders a lot. Yeah, seller finance is brand new. That means there's been no payments yet. They're going to be performing. They haven't made a payment yet. That's kind of how we set you guys up. Now, when you put a fixed dollar amount in there, there's a few things. When you put a fixed dollar amount in there, you want to factor in the fact that, okay, if it's $20 a month to service a performing loan, if you just put $20 in there, that's fine. But if you had escrow services required, there's still that $15 difference that you're missing now because that's an additional $15. The problem also with the fixed number is if the borrower goes non-performing, that $20 fee with Madison jumps up to $95. And at that point, the borrower is only responsible for $20. Another thing is if you sell that note, the terms don't change. So if you decide to sell the note to Z, hypothetically, the terms don't change. If she decides to take that note and says, oh, I would like to go have another servicer service this, they have different fees than, we all have different fees. We're not super far off for the most part, but we all have different fees. So it might cost, for Madison, it costs us $35 to service a performing loan with escrow, but another servicer might only cost you $15 or $20. The way Madison does it, if it is written out and the borrower has acknowledged it and signed it and it's part of the note, we actually still charge you as the lender first. You will be reimbursed with the borrower's payment.
Right. So I guess I guess what you're saying is that probably better to use the servicing pricing and cost as a cost of doing business when buying notes, right?
That's naturally what it is. It's your investment. This is to keep you as a lender with your note in compliance. That you have to have a servicer. You should never be self-servicing. I tell everybody that. It is my opinion. It causes bigger problems. We handle tax report. We do a lot more stuff that lenders who service on their own, it's probably a lot more legwork. Like we do have servicing software that, does a lot of this stuff for us as well. I would I always remind lenders that it's for you. The servicing is not necessarily for the borrower. It's for you. You're my client, not John Smith who lives on 123 Main Street.
Right. It makes it more passive investing as opposed to active, and especially if you're going from a first position performing note to a non-performing note, then becomes very active, right? If
Yep.
you have to go through foreclosure or things like that. That's why you need people like yourself, right? And your service, right? Well, great. Appreciate the answers. Very good insight. Thank you, Shante.
Absolutely.
So I have a couple of questions.
Go for it.
So how does that work, the servicing, when, let's say, a person is investing out of their self-directed IRA? How are the fees taken out of their IRA?
So with IRAs, we can't deduct. So you can't necessarily set up an ACH debit with us because we can't pull money out of your IRA. What we do on a performing loan, just to kind of make it easier on you guys, a lot of these IRAs that we do work with, we understand, like the custodians, we understand that it costs you guys money to get a check cut to pay a servicing fee. So when there's a performing loan that you have, just think that at least you're getting 12 checks a year cut just for the servicing fee, not anything additional that you decide to do. So if you want a door knocker, demand letter, those are additional fees. So what we usually do on performing loans by lenders who own it through their IRA is we will deduct your servicing fees before we send the funds to your IRA custodian. Therefore, you guys aren't getting charged. I think sometimes it's $7-8 per check. It doesn't sound like a lot when you have one loan and you do it once a month, but so as you grow,
you're doing that annually. So of course,
no, we'll deduct monthly.
Monthly. Okay.
So you'll have to get the first check cut, no matter what, to pay the boarding fee. But so let's say in the month of April, your borrower makes a payment. Before we send you the funds, we'll take out the $20 monthly servicing fee so that you're not getting charged for cutting a check to just pay a servicing fee. There are some lenders who tell their IRAs to pay servicing, for a year. So they'll send 20 times 12, and do that. And we'll just kind of keep that credit running for you guys and just use it each month. It is a little bit more difficult when your loan is non-performing. So at that point, you still kind of have to issue that check.
Right. And so along that same line, what about when, because some note investors do what are called joint ventures. How, I guess, how or who would be responsible to pay the service fees? Is it just split amongst the joint venture partners? Or?
The way that we have been setting every JV partnership up is that when you buy that note, if you're going to buy it with me, let's just say I'm ABC LLC and you're 123 LLC. If we own the loan 50-50, and when we get our assignment, when we sign that purchase and sale agreement, and it says that both of us own 50% of that loan, we both need to go set up with the same servicer. What Madison will do is set it up, make sure the loan is set with that 50-50 split, and you will get your 50% ownership. I will get mine of that payment, of each payment each month. We handle the tax reporting as well. So as lenders, you should be getting a 1099 for all the interest you received in a year. The homeowners will get a 1098. That'll be split up. There is an additional lender fee because now we're tracking for both of you. But we will set it up. You both need to be set up if you both want to get paid. There's tons of lenders who are like, no, just put it under my one entity, and that's what we do. But then that means you, at the end of the year, you're responsible for getting that. Yep. That means you're responsible for getting that your JV partner their payment. That means you're responsible for getting them whatever 1099 tax information they need. We won't do that if it's not set up with us like that.
Right.
So it's not always 50-50. It could be 70-30. I think I just saw a loan the other day that's going to be 50-25-25 between 3 people. So that's just what we did. I don't see that often. In the 8 years I've been doing this, I don't see that too often, but it should be split up that way. Unless you guys have some stipulation or something in there, it's rare that I hear about it.
Off of the agreement.
Yep. But you'd have to let us know that. We would naturally not know. So I naturally am being told, hey, this is what happens. So.
All right. So got a few more questions. So One question is, how often does Madison communicate with borrowers and lenders on a non-performing note?
It depends at what point how far into this non-performing is. So for non-performing loans, we just get it boarded, the first thing we're gonna do is our asset managers, our team, whoever's assigned to your loan, they're gonna reach out to you. And they're gonna ask what your game plan is, what some exit strategies you want to made available to the borrower. We work for you, you hired us. So we don't wanna offer the borrower anything that you guys are not okay with. So I have tons of lenders who are like, Shante, I am not offering a loan modification. I'm going to do a deed in lieu or a full reinstatement
foreclosure or whatever.
payment. Yep, before they get to foreclosure. There's people who are out of the gate like, nope, this borrower is.
So if let's say I had one of those non-performers and I wanted to, work with the borrower and do a modification, what do I need to communicate to you?
You have to tell us that you are open and willing to do some sort of payment plan with them, whether it's a modification, forbearance agreement. What happens at that point is we hear that from you. The hardest part of a servicer is getting in contact with that borrower. That is actually the absolute hardest part. Getting them to work with us, letting them know like, hey, like we're your servicing company, we're trying to help, your lender's trying to help work out something that makes everybody happy. The biggest challenge is when we get that borrower on the phone. So we're calling, we're emailing, we're sending letters. It's until we can make contact. Of course, we're not harassing. We cannot call every single day. That is way too obnoxious. And that's borderline harassment. But we're trying to get a hold of them. If we do, we will never put a borrower in a payment arrangement, such as a modification, a forbearance, anything that's like a monthly payment plan, without getting proof of their financials. So what that means is we have a financial application. So when we talk to the borrower, they're like, oh my gosh, I lost my job, I got divorced, I sent my kid to college, COVID, whatever it is. We ask them what their intentions are. Do you want to stay in the house? Are you in the house?
Now, who's going to be making that decision? Is it going to be the servicing company or is it going to be me as the lender?
What decision?
The decision of whether or not the person has the ability to repay the loan.
So we send the financial application to them. They get 30 days to complete it, submit their pay stubs, W-2s, and bank statements, as well as completing their forms, breaking down their finances, breaking down their hardships. When we get that back, we make you guys review that. It's up to you ultimately. I don't get to say, it's not my investment. So you'll sit and say, you know what, Shante, I can work with these numbers. Or you'll say, you know what, I can't.
No.
You just have to let us know because then we have to send a letter to the borrower, either offering them something or telling them, hey, your attempt for loss mitigation at this time has been denied and for whatever reason. So whether their, debt to income ratio is too low, if they don't submit it, you're not obligated to do anything. There's different reasons. So maybe a modification isn't the answer. Maybe you do something a little bit shorter term, like a forbearance, something that's like for 12 months, hoping that their financial situation will change, give them time, but it's up to you. We don't get to decide when your loan is being pushed into foreclosure. That is up to you. There's tons of lenders who are like, hey, I'm just not ready for that, which is okay. We handle all that coordination. So we can either use an attorney that you like, that you know of, that, whether it's through networking or someone you've worked with before. If you don't have an attorney, then, that comes to us. There is no fee for that financial application. That's part of the monthly servicing fee. So that's part of what we send it to the borrower. We expect them to send it back. We send it to you guys to review. It's up to you guys to determine that. So that's part of the loss mitigation fees and servicing that we offer.
Okay. So, and I think you just answered this, but is there a fee for that financial review? No.
Nope, it's part of that. It's part of that program under our full collection servicing program. So we'll send that because, again, you shouldn't actually be putting a borrower in any type of agreement without proof.
Right.
You don't want to set them up for failure a second time. That's the way I look at it. So,
absolutely. Aldo, you can go ahead.
Yes. Okay. Thanks. Couple more questions.
We love it.
Well, here's a question. So if you buy a performing note, and basically it's boarded with let's say servicing company A. So most of the people usually leave the note being serviced with that first company that you bought the note from. But sometimes some people, they board or deboard the note and board with a separate company as servicing B. So why would they do that? What is the purpose?
You're not obligated to use the servicer that your seller is using. It's up to you. It's your servicer at the end of the day. You're hiring that company. You don't have to keep it. So let's say a loan is serviced by Madison, and let's say you bought this loan, and if you're not obligated to keep it with me. Of course, I'd like you to, but
sure.
there's a lot of lenders, they change it for a few different reasons. They buy a note and it is serviced by another servicer, but they like to have all their loans in one spot.
Right.
I have lenders who like all their loans at Madison. They don't want to deal with 3 different servicers. So they'll transfer for that reason. They will transfer sometimes off of fees, sometimes off of what is getting done. Every servicer we don't do the same thing in the ultimate grand scheme of things, but sometimes it's, hey, I need this loan to have a little bit more attention. This company is a little bit better at borrower outreach and communication than this company. It's a preference thing. It's not, everybody has their different reasonings. I have lenders who sell notes and their buyers, I talk to them and, hey, do you want to keep it here? This is what happens. It's definitely cheaper. Also, if you keep it there, you're not paying a boarding fee and things like that. Being the buyer of that, but there's many different reasons, and it's a personal choice. It's for you. It's for your entity. So if you like that, I have tons of lenders who are like, no, the loan's already over there. I'm going to test it out. And then 3 months later, they're like, Shante, I cannot deal with the servicer. I'm transferring this to you. What do you need?
Right.
So
yeah, that kind of makes sense. So basically, if you have let's say you start with 1, but let's say you have you're up to 10 notes. Obviously, you start to keep the one supplier, like one, as opposed to if you're starting buying things in different states and with different. And now you have A, B, C, D, E, F, like now you're, basically you're scattered in all these different servicer company, right? So might as well keep one. And then, I talk to Shante all the time now. So, right. So I'm a good client, right? So I get good service. Okay. So that makes a lot of sense. Now, the other question would be, so if I have a performing note, like first position, and if the borrower all of a sudden stopped paying, right? So what happened? Can you walk us through what is the process to get the borrower to pay again? And also the second part to that is what are the fees involved in that process?
Yep. Just so you guys know, all of our fees are located on Madison's website, madisonmanagement.net. If you hover over
I'm going to put that up again. Just before we end, I'm going to screen share your contact information again and the website, so that you guys can contact.
The goal is to not have this loan go non-performing. In Madison's eyes, if your borrower gets to that 3rd month of no payment, at that point, that's when the servicing program changes financially on the fee structure side. So it'll go from $20 to $95. The reason being is that now the asset manager that is assigned to that loan and kind of monitoring and making sure that borrower is making payments, they're now doing extra work. They now have to call the borrower, figure out what's going on, track them down. Why are you not paying? What's happening? We don't want it to get that far.
But Shante, I mean, after let's say you miss 1 month, don't you have a so you have to talk to or say something to the lenders saying, because you're working for us, right? Are you going to go and say, oh, your note borrower on this note hasn't paid the last month?
We don't actually have to tell you that.
You don't?
Here's
okay.
why. We have a portal for every lender we have. I don't want you to call me and say, Shante, did my borrower make a payment for the month of March? I want you to go on that portal and look at it.
I take a look and see, every month.
And you'll see all the activity. So you'll see you'll see every statement, every late notice, every letter, all the payments being made, how they're applied, but you'll also see every phone call that we're making to this borrower, every email to you about this loan. That's all documented. Okay. So you actually, no matter what day or night, what time, if you're up at night and you're like, oh my gosh, I don't know if John Smith made their payment, they said they were going to make it, you can see all of that. So no, your asset manager is not going to be like, hey, your borrower is a month behind. Your asset manager is looking to make sure that the borrower makes their payment before their grace period ends.
Right. Which
you don't want them to be late.
Which is the 90 days, right?
No.
Typically?
Their grace period is based off their note. So borrowers, they might be due on the 1st, but they have 15 days to get that payment in before they're charged a late fee.
Oh, the late fee.
Yep.
I see.
So we don't want them to get to that 15th day. We are calling them a few days before that 15th day, like, hey, we haven't gotten your payment yet. If we don't get this in, you're going to get charged a late fee. We're double checking that. The moment that grace period's over, a letter is being sent saying, hey, your payment's now late. And at that point, we're calling them again. Hey, what's going on? Why did you fall behind? We want to know what's happening before they completely just kind of self-destruct.
And the late fee payments after 15 days, that's on basically that's added to their P&I, right?
It's usually like a percentage of their P&I or a flat number, depending on the it's written in the note. It's not a number that we pick or you pick. So like in the state of North Carolina, you can't charge more than 4% of that P&I, and you can't charge it until that 16th day hits. It is that the system calculates that. You will see their late fee balance. You'll see if they have any NSF payments, and that balance comes up there. You'll see all of that. So you guys actually get firsthand like knowledge of your own loans. The whole reason for that portal is for you guys to understand how this stuff works, and so you can see all the activity and all the calls that are being made, every email, every letter, the whole nine.
So if the ACH hasn't been received for 3 or 4 days, then I can check my portal and say, okay, well, they haven't paid yet, right?
Yeah, you should always check your portal. We disperse payments on a weekly basis. So basically any borrower who would have made a payment, and every servicer does this a little bit different. Any borrower who made a payment from March 15th through March 19th, lenders are going to start, we're going to start sending out those funds to those lenders on Wednesday, the 24th. The reason being is that payments made on the 19th, we need to give enough time for the bank to make sure that they cleared.
Okay.
That's just banking side. That's not even like us. So that's just how that works. And you'll get a check detail report that lets you know, okay, these borrowers paid, this is how much they paid, breakdown of principal and interest, and this is how much is being sent to you. You will get notification of that. And if you set up an ACH, we're direct depositing that into your account. So you should receive that by the end of this week, if not by Monday. And then if you didn't opt in for ACH for whatever reason, you're waiting on a paper check. And that's the post office kind of delivering that to you. So it definitely is going to take longer.
So if that performing note goes to be sub-performing, and now your borrower is paying with late fees, 15, 20 days after, but he's paying, so it becomes a sub-performing note.
We don't want to penalize you guys. You'll still get charged a performing rate. If they're paying monthly, Madison does this. I cannot speak for anybody else. If your borrower is paying consistently, whether they're paying a payment's coming in every month, even if it's after their grace period, we are still going to charge you performing because the payment's still coming in. If the borrower is paying every single month, let's say they paid in March, they paid in February, they paid in January, but those payments are being applied to August of 2020, we're not going to charge you guys a non-performing fee for that. We think that's silly. That just means at some point in the loan history, the borrower stopped paying, they fell behind. We don't think that you guys as investors should be charged a full collection non-performing fee when the borrower is making consistent payments. As long as they're paying consistently, you're going to be charged the performing fee.
Perfect. That's excellent. All right. Thank you, Shante.
No problem.
Very good. Okay, so I had one other question. Hey, Smitty. One other question. You said that the boarding fee was $40, and depending on whether it's performing or non-performing, I believe you said the fee for performing was $20 and non-performing was $95 or something.
Yep. I'm going to paste
$15 additional for escrow services.
Yep. So the fees are different. I'm going to just in this chat paste the link as to where the servicing programs are, as well as the servicing fees. So you guys can kind of browse through. They do change what's additional, how it's charged monthly, just so you have an idea. That is the only, as I stated earlier, that is the only place our fee structure is. There is no printed documentation. If anything ever changes, it changes in one spot.
There.
Okay. Yep.
Did you have a question, Smith?
Yes, I did. How you guys doing?
All right.
Hey, Shante.
How are you? Hey.
I did. So I had a question about someone told me from another servicer. I emailed you yesterday about, a week ago about switching. So I'm going to do that. But,
customer.
As I said, the name looks familiar.
I have one that's not paying. So I wanted to possibly do some type of loan modification, or talk to them, and they sent out the financial packet. Of course, they didn't fill it out, but they told me that, and it's a contract for deed, but the servicer told me that in order for me to do any type of loan modification, I have to follow some government guidelines. And I asked him what those government guidelines were, and he said, oh, it's a bunch of stuff. And
I'm not sure what government guidelines they're referring to, because at the
right.
end of the day, you are in this private secondary market. If you and your borrower can come to terms that you guys, like if both of you guys, both parties are happy, I'm not sure what they're referring to.
Yeah, I don't either.
Transparent. If you
But
want, feel free, like we could set up a call and like kind of discuss a little bit further, because that doesn't sound right to me.
yeah,
And I don't want to completely tell you that they're wrong, not understanding exactly what guidelines they're telling you to follow. But I service many, many, many CFDs and land contracts and things like that. And that's not something that we tell our clients.
so my next question is how long does it usually take to bring on, switch servicers? What is
The process, in a perfect world, I wish I can give you an exact time frame, and I can't. And there's a few reasons why, as much as I want to. I can't, because every servicer has a deboarding or transfer out process. Every single one of us.
yeah.
There are a little bit different. So if you just bought this note and you're asking them to transfer it, they have things to tie up on their end before they even think about generating a goodbye letter. It could be different things. I know with us, we are not transferring anything out for anybody if your invoices aren't up to date. That's number one. So we want to make sure, like my accounting team is like, okay, no. There's a deboarding fee if you're going to transfer a loan out. That has to get paid before you can initiate that. So there's a few different ways. And if you just bought this and let's say you told your seller, hey, transfer this loan out, you want to make sure your seller actually did their job and told their servicer. That's the biggest hang up that I've been seeing recently, is that, yeah, people are buying these notes and I'm like, okay, tell your seller. The seller's not doing anything. Or they haven't told their, servicer. I always kind of push for these lenders to be like, hey, when you being the buyer, email your seller and say, hey, can you notify your servicer to transfer the loan to here, Madison or wherever. Ask to be included on that email.
Okay.
Ask for proof to know that it was actually sent. Just say, hey, can you make sure? And hey, we can rope Shante in or whoever from any other servicer. Kind of just ask for it, just to make sure that the ball's rolling.
Right. So this one's not new. It's been there for, a few months. So basically all I do is do I inform them, hey, I want to transfer this?
You email them and say, hey, I'd like to transfer this loan to wherever you want to transfer it to. If it's Madison, you have my information. You can literally copy and paste my signature. That's what most people do. Copy and paste that and just say, can you please initiate this transfer? They'll let you know, since it's your current servicer, what the transfer process is. And then depending on who it is, and I feel like I know who it is, they'll actually begin that process.
Okay, cool.
Not saying any names.
Without saying names.
Without saying any names.
Without saying any names.
Yeah, it's on the other flip side, it's good to see both of you guys' faces and meet you. I know I've talked to you, Shante, on email, and I've recently met you, Z. I've seen some stuff, and we'll be talking later. So,
absolutely.
Where are you located?
I'm in Kansas City.
All right, and where's your note?
The one that I want to transfer is in Kansas City, actually.
Awesome.
Yeah.
Not bad.
Yeah, so you missed a little bit because we talked about those states that they service.
Yeah.
But
that's on the site too. I always tell people, go on the site and just kind of read. If you guys have any questions, just send an email to servicing@. I'll respond to you within usually 24, 48 hours max. And we can set up a time to actually call and have a call and talk. And you guys can ask any questions. I like questions. I don't care how silly you guys may think they are. My job is to kind of help you guys and spread that knowledge and let you know what you need. So don't hesitate. Nothing's dumb or silly, and you're not bothering me. This is my job. So
I've got Shantae's information back up here, sharing, so that in the event that anybody needs to reach out to her, you can do that. And I didn't see any more questions in the chat, or if anybody has any questions, feel free to unmute yourself and ask.
Sorry, it's Aldo. I have one more question.
I love you, Aldo.
I'm just saying,
thank you. Thank you, Z. Well, I'm learning, so I have
That's
questions.
all right. I love the question.
Good. Okay, here's a question. So, so let's say you just purchase a note, a performing note, and you're gonna basically board it to one company to a new company. Okay, and that note right now, the doesn't have the tax and insurance escrowed. So the borrower is paying themselves. So now you want to make sure that the tax and so the TI, the tax and insurance are being paid into an escrow. So if I go to Madison, can we set up to have the new servicing, including
Escrow.
the escrow?
Yep, you just have to provide us with the most recent tax bill, which is something you 9 times out of 10 you can find out online, and then we'll have to get the insurance information. So in a perfect scenario, performing loan that's been borrowers been paying it outside, it would be coming, the previous servicer should have it. They should kind of be sending that. It should be somewhere in this collateral file. So as you guys are doing your due diligence, look for that.
Okay.
Look for that, because the insurance is the one thing that isn't an easy thing to look up. If you know that, I live in Morris County, New Jersey. I know that I can call the Morris County tax collector and get a tax bill. That stuff's easy to find. When it comes to homeowners insurance, there's no like universal database to just kind of search a property or a borrower's name to be insured, to know that they're actually insured.
Now, can you demand that because you just bought that loan and you're going to have service somewhere else, so that's going to be something that's going to be changing for the borrower, right?
I was getting ready to ask the same question.
We're going to pull up your note. We have to see what your actual contract reads. That's going to be the actual, like, not your purchase and sale agreement, what that borrower signed. What is their responsibility? Because there's also some lenders who, their note reads that they have to have an escrow account. And some lenders are like, no, I don't care. They can pay it on their own. We're definitely going to double check that and make sure that you can enforce that.
So you think having seller finance notes, when you create those, you can actually create like easier things to navigate and less process and making sure that things work on your favor as the investor, right?
Yeah. Of course, you wanted to make it fair, but you definitely can set it up like, just to protect. You want to make sure the borrower's taxes are getting paid. Yeah, so pay extra each month. You want to make sure there's insurance and you guys are included on the mortgagee clause, things like that. You do have a little bit more flexibility when you're creating something from scratch, not something that's already existing.
Because you're creating it. You are making the terms.
You're making those terms and that borrower's just agreeing to it. So that's kind of.
Yeah, you just want to make sure it's fair, but you want to make sure as the investor that that it's as passive as possible, and then becoming, if you're buying a performing note, you don't want to become non-performing or somehow, right, and have all that that headache to deal with, right?
Yep, and just so you guys know, one little tidbit about Madison, from what I understand at the moment, not many servicers in this space, so that's FCI, SN, those big ones that you guys all hear about. We do report to TransUnion after the first 60 days of your loan being boarded. Once we can confirm the data is correct and things like that, it is something that's turned on automatically as long as your borrower is like a person with a social. If the borrower is a company that bought the, like that's originally on the mortgage, we can't obviously report on an EIN number kind of thing, but we do report to TransUnion. That does happen automatically. So it will, the cool thing about these it's a good tactic for your non-performing loans. When borrowers aren't paying, they're getting letters. People don't answer their phone half the time. People don't get, open their mail and it looks like spam or whatever the case may be. But a lot of times people see this on their credit report and that's when they call, because it's going to read that Madison management. It's going to read that mortgage. It's going to say you're over 180 days delinquent or whatever the case may be. So for seller finance borrowers, it definitely helps them in the long run, like in a positive way. For borrowers who haven't been paying for years, they see that their credit score, it does affect your credit score. Naturally, it drops. So that does help a lot of, with the hardest part is getting the borrower on the phone. But I've noticed a lot borrowers call in like, what is this? Why is it on my credit? Who are you? And then that, that opens that conversation. Well, look, we've been calling, we sent all these letters. So that does kind of help you guys out as long as, we can track them down. We do skip trace borrowers. We do double check if they're in bankruptcy, things like that. So just a little tidbit for you guys.
Well, that's very good information for sure, especially for non-performing notes, right?
Yeah.
Do you service commercial notes as well as residential mortgage notes?
We do. I'm not going to lie to you. We don't have that many commercial investors. Just that.
I was just wondering if they were serviced the same way that a residential.
The only thing is the fee structure is different. It's based off of like a percentage of the balance. So that's the only difference. But they're still, they're still sending statements, we're still processing payments, we're still handling that side of things. So we still actually almost follow the same guidelines as a residential mortgage, like you're required to do by CFPB and things like that. So we do, I think we've had like one still active, if that. But it's just not something that we see too often when we go to conferences. I do these webinars. Most people are buying, especially right now, they're either seller finance investors, or we're seeing a lot of land contracts, contract for deeds and things like that.
Sorry, just to expand on that commercial servicing, are you talking about like commercial building, like businesses, or are you talking about like multifamilies, 5 units and more?
Well, I believe all of them would fall into commercial.
Right.
Yeah.
Okay.
Yes.
So if I get a loan for a multifamily, let's say a 10 unit, then that would become into commercial, right?
Yes, that would.
And you would be able
naturally be
to
deemed commercial.
service that, right?
Yep.
Okay, perfect. Thank you, Shante.
No problem.
All right, everybody. Shante, I appreciate it. Thank you so much. You gave us
No
so
problem.
much great information this evening. And thanks, everybody, for the awesome questions and the interaction. So we're going to let you go. And thank you for your time. Again, I appreciate you. Everybody,
Thank you.
have a good evening.
You guys, if you have any questions, don't hesitate to reach out. Ask away. That's what I'm here for.
All right.
Thank you,
All right,
Z.
you guys
Thank you,
enjoy.
Shante.
Stay
All right.
safe.
Okay, thanks, Z.
Bye.
Bye.
Night.